A presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 7th. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And I believe we should be pioneers of our future versus prisoners of our past. So let's make sure that you and I, that we do everything to pioneer our day. And let's do that by always remembering that the secret to a positive outcome in life, folks, it's very simple. 2 words. It's called reframe and elevate. Reframe and elevate. Put that down on a pad of paper. Now, the reason why I say that is yesterday, and I don't recall the conversation, who I was having it with, but there was and if you've never tested out our Tiger's Den, folks, get over to the homepage of TFNN.com and do that. Sign up for a 30-day free trial out there. Great peer group, a great group of individuals inside our Tiger's Den. Now, yesterday there was a comment that was posted in the den, and the question that was posed to me was, what's more frustrating, golf or trading? Now, think about the 2 words, reframe and elevate. Because, you see, I've lived my life like this. I suggest that you do as well. It's really the key to being able to have positive thought, this enthusiasm, this energy that it is that's contained within my soul out here. It's all about reframing and elevating. You see, I said, when you're passionate about something, when you love something, neither is frustrating. It's really always about opportunity out there. You see, it's always about reframing and elevating. You see, the universe is always going to go ahead and throw us a curveball out there. That's the role of the universe. Each morning, it awakens to provide us with opportunities. Some of those opportunities are a matter of being able to reframe and elevate. Some of my best golf shots were hit from some of the poorest tee shots out there. If you're a golfer out there, you know this to be true as well. But the whole thing is your approach when you get up to that bad original golf shot out there. If you reframed it, and I always did, I always said the universe wanted me to be in that spot. From some of the worst locations, I've hit some of the best golf shots that I could ever hit. Memorable golf shots out there. Well, I always believe that golf, or anything we do, but I like to believe that golf is much like life out there. And if I had approached that horrible, I would use an S word out there, but if I had approached that golf shot without reframing it, without the belief that I was there for a reason. Remember, life happens for us, not to us out there. If I had approached that with the negative attitude, what chances of being able to hit a good, miraculous shot out there? Not too much of one. So the whole key, this is what I want you to pass this down to your kids. I want you to practice this on it, because it's not just about golf, it's about everything in life. You see, life is about, circumstances are going to happen to each of us out there. It's always a matter of reframing and elevation. You see, you got to elevate yourself, you've got to elevate others. Practice that, folks. Hey, I'll help you reframe and elevate a stock chart that you're looking at. All you got to do is give me a call at 877-927-6648. Internationally, our number is 727-445-1044, because I would love to hear from you. So give me a call, folks. It is Fantastic Friday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. It's Jobs Friday, by the way. Right now, we've got Dow futures are trading off 23 points, trade out at 17,480. S&P futures off 3, trading out at 2,025. NASDAQ futures are flat. U.S. dollar index somewhat flat as we speak right now. We'll take a look at the soft currencies. Hey, how about those hard currencies? $9.90 to the upside inside of Goldilocks. Very interesting, says Colonel Clink out there. Silver's up 16 pennies, trading out at $15.57. Light sweet crude up 54 pennies, trading out at 78.45. A quick peek across the globe out here. Let's go see what they've got. What kind of party are they throwing at Oktoberfest over in Germany? We've got the DAX. She is down 75 points out there. I guess the Friday blues. The FTSE, that's up 20 points. A mixed bag over in Asia last night. The Nikkei up 87. The Hang Seng down 99. Both about 0.5%, either the upside or the downside. And the Shanghai off 8, about 0.3. All right. So we had jobs Friday out here, first Friday of every month. I guess we added about 212,000 jobs to the payrolls. Of course, you and I, we know that number means squat. It's not an accurate number. If you or I, provided this kind of poor information to our bosses, whoever those bosses might be out there, we'd be fired because they never get it right out there. So why even come out with those numbers? Why don't you give us the actual jobs numbers from 2 months ago, something that they always continue to revise? Hey, let's just take a look at the market action out here as we speak and see where we're at. Let's go take a look at the ES Mini. Let's take a look at the S&P futures. She's down about 3 points. What do we know? Let's go take a look at it on a daily basis. We'll look at we'll step back we'll step forward and back in time. Let's look at a daily chart out here. If we take a look at a daily chart, nothing but just a beautiful, nice V-shaped bottom that occurred back here in October. Nothing really bearish out here. If we take a look at daily market profiles, 2019.25 is the old. Well, it's kind of not that. It's not too old. It's about 4 days old out here. That's our current market profile high. That level should act as support. 2019.25. You get below that, then you start taking a look at, the first figure I'd be looking at is 2012, 2011.75 to be exact. That level was tested yesterday, held as support. And I would expect any kind of pullback that level would act as support as well. If it doesn't, then you're looking at a pullback to 1966, 1949 out here. Nothing bearish or anything along those lines inside of the daily chart as we speak right now, inside of the S&P 500. Whoops. Yeah, there we go. Inside of the 300-minute chart, let's go take a look at that 5-hour chart, get a feel what patterns might be going on out here. If we take a look at the 5-hour chart, we see a slightly higher high that was formed out here. This was the high that came in at 9 o'clock this morning. So we've seen a higher high because it's a 5-hour chart. The bar that took place up through 4 a.m., small-bodied candle out there. So in actuality, we've got a bearish engulfing candle that took place at 9 o'clock. You get a continued move lower between now and 2 p.m. You're getting some confirmation of one of our favorite patterns that calls tops or bottoms out here. When price moves higher, it does it with less relative strength. When price moves lower, with less relative weakness out there. So in the 5-hour energy chart, it says, hey, key levels here. Again, that 2011.75 out here. It's daily market, not daily, it's a 5-hour market profile high is 2020. It's got 2020 vision this morning. And we're trading at 2024. Close below that, you can expect the 2012 area to be tagged and tested inside of the S&P futures out there. If we take a look at the 2-hour chart out here, what's the 2-hour chart show us? 2-hour chart does not show us any kind of price movement higher with less relative strength out there. It does show us in a fifth wave out here. It does show us starting to trade in between a box that has arrived here over the past about 6 hours. If we take a look at that, 2023 becomes its support level. So a break below 2023, and what you see is a test of that 2011. Of course, you might be saying, hey, you reframer and you elevator, how come you're not talking about moving to higher ground out here? Like, nothing has changed in my outlook at this stage for a market that is going to consolidate sideways, consolidate to pull back over the course of the next couple weeks. There is nothing here that has changed just yet out there. Some things could change that, but until I actually see those things play out, my expectations were just really, in essence, identifying what that consolidation high level might be. I believe this is going to be a frustrating market for many when we take a look at the indices out here just for a couple weeks, and then Santa comes to town again with all of his elves out there, Stevie being one of them, and then markets move to higher ground. If we take a look at the 30-minute chart out here, not showing a ton. You'd have to say the consolidation pattern could be the highs of yesterday in that 2000. Well, actually, I guess it was spiked as well this morning here, right around that 2033 level. So I would say the consolidation pattern seems to be right around the 2033 to 2012 level. Not too bad of a consolidation if you can sell the top and buy the bottoms. Now, the top hasn't been formed as much as the bottom has just yet, but at this stage, that's what I am going to go with. So that's what's going on inside of the S&P futures. Now, with it being Jobs Friday, we've seen the largest movement here inside of Goldilocks. Gold was up, the high so far, intra-session, What is it? 1159 is the number you're trading at 1150 as we speak right now. Let's go take a look at the December contract, get a feel for what's going on out here as we take a look at Goldilocks, up $7.90 right now. So what we know about gold is the following. Number one, as I pull this chart back over here to the left, we know that if we take a look at its last set of major swing points, those swing points being the low from the trading session of October 6th, that low out there is 1183, all the way up to the high that was put in here October 21st, out at 1255. The expansion of that set of swing points, 1.618, 1138.60 is the number. And price yesterday got down, it tested it, small bodied candle out here. So gold actually behaved pretty darn well considering the move higher inside the U.S. dollar index, of course, courtesy of your friend and mine, Super Mario Draghi, out there like a PR machine. What a PR machine that guy is. He floats stuff out there that really typically never comes to fruition, but somehow people buy into his candy store out there. Look, let's just take a look at the stock charts. No commentary needed. What we know about the gold chart out here is that it's made that 1.6 million expansion. It's held that level out here. That could be the extent of the move. Could be a counter trend move. It could be a bottom that is put in inside of Goldilocks. If we see price move below the 1138 area, now gold is in the extreme oversold condition, so at a minimum it requires a bounce. But if it can't hold this 1138 area, you should see 1106 next in its sights. Now, if we switch over, because of Jobs Friday, you got some movement going on. It was mostly inside of gold this morning. We saw some spikes inside the futures contracts, the indice futures contracts out here. But gold really had probably the largest reaction to the news of 212,000 jobs, whatever they say the unemployment rate is out there, whatever it is that you want to believe. If we take a look at gold here, and on a 30-minute basis, we had some volume. So it does say that gold ought to go test the high here on that spike. Not using a 30-minute chart. I'll switch down. Let's switch down to Tommy's 10-minute chart out there. Let's go with something that is a beautiful thing. So let's go see where that spike came in, just to make sure that there was nothing that came in off of those highs. No, there most certainly was not. So that spike right here at 8:30 this morning on a 10-minute basis, you had volume out there of 34,000 contracts, the top of which is 1159. So 1159 ought to be tested at a minimum. You take out 1159, let's go see where price could go. And do we... Not really an A to B equals CD pattern of any significance that has formulated itself at this stage of the game. Let me come back to a 30-minute chart out here. Just on an intraday, I want to take a look at some other swing points, get a feel for. So if you're going to look at where is it that might be a line of demarcation in gold here, from a retracement standpoint, I'm going to come all the way. This is a 30-minute chart. So between 6 and 6:30 on November 4th, we're going to go from that high down to the low that came in yesterday or late last night. How about that? The 0.618 retracement was 1158 even, and we saw gold get up to 1159 even, Stephen. Getting above 1159, that would be good. That would be good for Goldilocks. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, let's go take a look at high-ho silver out here. We haven't looked at silver for a while. Take a look at what's going on inside its December contract. Now, we know it's made a 1 to 1.6, made a little bit more than that. A to B equals CD to the downside. No reversal here as we speak just yet. That says that silver 1459 would really be the next target area. The 1 to 2 A to B equals CD to the downside. You know, typically, if you do a 1 to 2 A to B equals CD, the market's going to do something different. So we're close. We're close. It's no cigar out here in the silver. You'd sure like to see silver give you some type of nice bottoming signal out here. You'd like to see the weaker link. You know, just think back to October 16th. It was really October 15th, October 14th, and we started to see the Russell 2000, you know, and that had the death cross. It had everybody had checked it off its list, yet it was the one that was first signaling that a bottom in the market was coming. So in a sense, really the same kind of a thing that you could look at for silver. I don't see it here. It doesn't mean that's the way it has to play out. It doesn't mean you need to pay attention to both gold, silver, look at those short-term charts, get a feel for what's going on. Of course, that also means we have to take a look at what's going on inside of the currency pairs. And if we take a look at the euro yesterday, you know, it just simply broke all kinds of levels of support out there. No type of bullish reversal signals as we speak at the moment. Even if I go down, let's do this. I haven't done this, so let's do this. Let's go take a look at a 30-minute chart out here 30-minute chart. This does not show any. This doesn't show any kind of reversal signal or pattern. The candle being formed right now, but no pattern, no A to B equals CD pattern, anything along those lines out there inside of the euro as of yet. And for gold, for silver, for light sweet crude, for miners to really get traction out there, you're going to see the need. We're going to need to see a topping in the U.S. dollar index. I still believe that's on its way. It's going to be one of those things, and people are going to say, how'd they pull that out of their stock chart out there? And I don't know how they pulled that out of their hat, but we're going to watch it unfold, and we're just, I'm just preparing you for what is going to be the eventual outcome out here. It may be the mere fact that somebody just finally says, we stopped drinking the lemonade from Mario Draghi. He really can't do any of the stuff that he's been throwing out there. In any event, that's what's going on inside of the euro currency pair. So we take a look at those two commodities. Let's go take a look at a couple things here that are popping and dropping in the pre-market. Hey, how about to the upside out here? Sears Holdings, that's leading the charge dollar-wise out here. SHLD closed at $32.67. It's up, trading out at $39 out here. I don't see what the news is behind this here other than they've identified what kind of loss they're going to have for the third quarter, so it must not be as bad. Again, trading out at $39.70. $39.70 is going to be taking on this little swing point here from October 24th that has 3 million shares, the top of which is 40.78. You get above that inside Sears Holdings, and then you've got an A to B equals CD to the upside. Let's go see if that A to B equals CD runs into resistance of a supply line that I just noticed on its stock chart. But first, the A point, B point, and C point being yesterday, we'll call it. That 1-to-1 takes you up to 48.82 inside of Sears. So if it clears that swing point, and how about that? It takes us right into the supply line. That's not really that much of a supply line, I think, to worry about. Sears Holdings gap down, fairly large price-wise, but volume-wise, not that big of a deal out here. Only 1.5 million. Is that right? Yeah, 1.5 million shares. 2.8 million shares. Okay, 2.8 million shares. But this thing had 2.9 million shares just a half a dozen or so trading sessions ago. So that's not. So it looks like Sears Holdings wants to make a run for the April 4th level. That's out at about the 50.73. 48.82 is your 1-to-1 A to B equals CD. And 50, what is it, about the 48.40 to 50.44-ish area. Looks like, I think I had the wrong swing point. 50.73 to 49.53 would be the number, it looks like, where Sears Holdings, SHLD out there. Looks like that's where that is headed to. To the downside, looks like biggest mover dollar-wise is Salix Pharmaceuticals. That is big. Closed at 138. It's trading down at $90 out here. This thing is headed right back to a sign of strength. Now, yesterday, this thing didn't have a lot of price movement, but it did have the volume in it, 6.4 million shares. It has a breakout session that has only 6.6 million shares. That's at the $80 level. Now, it's not trading down there as we speak right now, but I would have to say that becomes the target. It's going to break swing points here this morning. That's going to confirm an A to B equals CD to the downside inside of Salix Pharmaceuticals, SLXP, just your 1-to-1. It's going to do more than a 1-to-1. Would take you to 100.82. Yeah, it's already trading below that. The 1-to-1.272, $88. Looks to me like Salix headed to the 72 to 80-ish dollar area. This is Steve Rhodes. This is TFNN. Welcome to the show, folks. It is Fantastic Friday. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the ball off 37-point trade on the 17,516. S&P down 2.5 at 2028. Composite off 6 at 46.31. Russell 2000 down a couple points. She's trading 11.69. Silver up to 17 pennies. Goldilocks up 10. Trading 11.52. Lightspeed crude up 51 cents. Sears Holdings still leading the charge dollar-wise. The upside up $8. Channel Advisor. ECOM is the ticker symbol up 31%. Is that an IPO? That's a big move out there, or maybe a buyout or something. ECOM. Yeah, Channel Advisor buys E-Tail Holdings. So Norfolk Southern, NSC, is the ticker symbol. That's up about $3. You've got to the downside here, Salix Pharmaceuticals off $49. Intercept Pharmaceuticals off 15% this morning. She's trading out at 206. You got Financial Engines. Looks like its engine has got a problem. Down 20% off $8. Humana down 6% off $8 out here. DaVita Health off about 5%, down $4. Abercrombie and Fitch up 13% this morning. That's down about $5 as well. Also, you got Lionsgate Entertainment up 7%. Monster Beverage, MNST, up 4%. Let's take a look at some of these equities here, moving and grooving. So we looked at Sears, we looked at Salix Pharmaceuticals. Let's look at Intercept, ICPT. Let's go see. It's got 16% move to the downside off $40 as we speak right now. Let's see if this is it's had a sign of strength. So this thing is below that level. It had already gotten below that level once before. So you've got Intercept Pharmaceuticals trading back into the October 15th area. 664,000 shares. You've already done 300,000. You have touched. It looks like you've touched the highs, rejected it. What is this really setting up for us? Looks like a consolidation pattern. Oh, this is what it is. Okay. So on Intercept Pharmaceuticals, it's got some pretty significant support out here. It's a dangerous equity because if this thing really ever did fall apart, and one day it probably does, this thing could move back to its real sign of strength, its real breakout area, which is $71. You're at 207 right now. I'm not saying that's going to happen, but it is a dangerous thing out here when you have such wide price spread, accelerated volume, and you've come back into the gap. So that means you've got some fairly, you got some levels. It would have been much better for Intercept to have tested the low from that session on January 9th, which was 231.31, tested it and rejected it many times. And that's not really what took place out here back in the, as things were being sold in that about a week period of time back in October. So that one got back inside its gap. That's Intercept Pharmaceuticals. Let's take a look at a couple of these, the healthcare sector, XLV has been something that's been on fire, but some of these equities here this morning, like Humana, I think I saw another one somewhere, DaVita Healthcare. Let's take a look at Humana, see what's going on here. Now, they were out with numbers. Looks like revenues were up about 18% for their third quarter. Not too bad here. Their profit declined, though, and looks like let's go see what stock traders are doing now. It's been a really strong-looking stock out here. It has had a couple of moments of infamy to the downside back on July 30th. Which was, I don't see that being an earnings date, but back on July 30th, this thing had moved downward with about 4 million shares. Now, we've been trading for 8 minutes, 306,000 shares to the downside out here. You'd have to say that Humana at this stage, this is some potential volume off the high. 52-week high was, or maybe all-time high was yesterday. Let me put this back on a monthly chart and see if that is the case out there. I got to get... it says H. I don't know if that's the all-time. Yeah, it's all-time high. So it makes the all-time high yesterday. Gaps down this morning. Not exactly what you like to see out here. But it's really all going to depend on the volume at the end of the trading session out here. But you do have volume off the highs inside of Humana. We'll see how that plays out for the rest of the day. Also to the downside here this morning, let's see, percentage-wise, you've got the, let's take a look at Abercrombie and Fitch. ANF is the ticker symbol. Down about 13%, 479. They were out with numbers before the market. Looks like this here is taking out a swing point here with some volume. That swing happens to be from October 24th. Only 4 million shares, and you've done nearly 2 million shares already. So let's try to get a feel for where Abercrombie and Fitch could be headed back to. Looks like we're going to have to go ahead and put this thing on a weekly chart to get a better feel, see if there's any kind of swing point lows or anything that becomes the target area for ticker symbol ANF, Abercrombie and Fitch out here. Come on. Come on, baby. A little bit of a slow head of steam here. There we go. Okay. So Abercrombie and Fitch starts to run into problem if it cracks this low out here, the swing point low that we're looking at, this little base floor that it has built, takes you back to July of 2012. We're trading into 2012, so certainly a weaker than market stock out here. The price level that it needs to hold is 28.64. The volume on that week was 38 million. So this week so far, not too bad. You're 10 million shares. We know today is going to be a higher than normal volume inside side of Abercrombie and Fitch, but I don't know that it's going to be able to pick up 28 million shares. But looks like Abercrombie and Fitch is going to go ahead and test that level. And then you got sort of if it can hold, if it tests it, rejects it with lighter volume out there, then maybe what you've got really going is a consolidation, with the high being around the 45-ish type area and the low being in this 29 range. That is Abercrombie and Fitch. Let's go take a look at some things here that are moving to the upside other than Sears Holdings. We've got Dexcom, DXCM. They're out with their third quarter numbers. Let's take a look at a daily chart. Not an equity that I can recall taking a look at. So this is its debut, the Trader's Edge out here. And as its debut, it's trying to take out its highs. The highs that we're looking at, the 100% move of a move, this is the way to do it. The high that we're looking at is March 6, 2014. Only 875,000 shares up there. You've done about 150 in the first 11 minutes of trading. So it's moving into a swing point, which could be resistance, but a close above 49.83 out there would be bullish. You'd also be taking out a B point. Looks like with volume, that B point is from August 26, 985,000 shares. So it would set up a couple of different A to B equals CD patterns to the upside. The first one, the small one, the conservative one, that's one you want to take a look at first. That would say this equity ought to make a move up to about the price level of, come on, baby. Well, 50.47 is your 1-to-1. You're at 49.73. But you come into a D point like that with volume, wide ranging bar says 53.65 would likely be its next stop. That is ticker symbol DXCM, moving higher, taking out swing points and taking out its high out here, big swing point. Looks like it's going to do that with volume today. Monster Beverage, for you, those of you, we talk about the 5-hour energy drink. Well, I guess we have to take a look at the, I don't know how many hours that Monster Beverage works for. And that's not actually the 5-hour energy drink sponsored by, who does the sponsoring of, I think that's Jim Furyk does the sponsoring of the 5-hour energy drink. Saw Brad Faxon last night. So it was kind of one I couldn't remember. Was it Brad that did it? No, it's not Brad. If we take a look at Monster Beverage up above a swing point out here from the trading session of November 3rd, 972,000 shares. You have done 254, so you got some volume. Now, Monster Beverage, this was on the deal that it did with Coke, I believe, back on August 15th. So you want to talk about wide price spread, accelerated volume, 20 million shares on August the 15th. This one has it. I think if we put this back on a monthly chart, I think we're back at, we're at 50. We're at all-time highs out here. So you're at all-time highs today. Nothing really. Let me put this to see if this thing is finishing anything up. But it's got such great support at that wide price spread, accelerated volume day out here. So it could have a monthly A to B equals CD to the upside. The swing point that we're taking a look at is takes you back to April 1st, 2012, 38 million shares. Yeah, you are up over that with, only 24 million shares. No, 31 million shares. Either way, you're still on light volume. That's pretty interesting. But it doesn't matter whether it's on light volume or not. Monster Energy, it's got enough juice in it to continue its move higher out there. Let's take a look at, let's go back, just take a look at the ES Mini, so we'll see what we have out here. We'll go back to the 120-minute chart. So the Dow's off 56, so the S&P is off 5. Nothing to really get too alarmed about out here. It's just as I have maintained since last Friday, a week ago last Friday, when you had the Bank of Japan come out with their, with the next round of quantitative easing. More important than that, you had the government pension fund out there that totally was revamping. They're trying to play catch-up. And by playing catch-up, not the kind of Heinz ketchup that you've got, they're trying to play catch-up and try to get some income. That means they've got a shortfall inside their pension funds out here. They are reallocating their funds, enough so that there's $118 billion that's going to travel to foreign stock markets out there. And I'd have to say, with the U.S. stock market being at its highs, this is probably a pretty good place for them to park a significant portion of those funds out there. So long haul, things look pretty good. If we take a look at that 120-minute chart, you've got the move down to, you're trading right now at the 2023 level. 2023 happens to be your market profile, your support level, your TAS market profile out there. You close below 2023, your expectation should be a move down down to the 2011 area. At least that's Stevie's expectation on what the markets are doing. And what we're really just seeing here, you're going to see on some days, you're going to see hope for the bulls. And other days, it could happen on both days, you're going to see hope for the bears out here. And the reality is neither of them have any hope. It's a consolidation that is really setting up out here. And it's a consolidation that's going to last for a little while. While everybody churns around and figures out. But have no fear, because Santa is near, and that should be in about 2 weeks. Then the markets boom to the upside out there as we move into the final phase of that Santa Claus rally. And then we got the rest of the year. You're in the positive cycle of the marketplace. So no straight shots out there, but that is what is going on inside of our markets. Now, the DAX, maybe that's a different story. The DAX is weaker. Germany is weaker than the U.S. stock market. If we take a look at the daily chart, its daily chart out here, I believe it only made a 0.786 retracement. Somebody might say, no, it didn't even do that. Just a little bit above a 0.618 retracement. You got a little bearish engulfing candle here today. However, these markets, it's just the DAX is weaker than the U.S. The DAX is still going to have its own version of a Santa Claus rally as well. It's going to do a retracement here. Probably sets up an A to B equals CD. Maybe it also just consolidates. The bottom of the consolidation could be the gap up from October 30th. So that was last week, the high of which is 91.46. So it may find support right in that area. That is on the DAX. If we take a look at let's go take a look at a couple of sectors inside of the S&P 500. Let's look at the top three. Oh, I mentioned the XLV. Let's go straight to the XLV. We took a look at Humana, which I'm pretty sure is inside the XLV, the healthcare sector. Now, this thing here, you can take a look at its swing point from September 24th, not the 19th, like our markets. This thing moved above it. That swing point had 8 million shares, and we saw a move above that with 11 million shares. So it's confirmed an A to B equals CD to the upside. The XLV has a longer range pattern out here. Again, I'm going back to February 5th. I'm going back to February 5th because we had our Gartley buy pattern that really came in off of that swing point. So I use that as the A point of all the A to B equals CD patterns, all the A to B equals CD to the upside patterns that are out here. In the case of the XLV, it's taken out that its B point with volume. That says 6908 is the number, but it'll head to 7177 when it's all said and done here after this consolidation market. What should the XLV do? I would have to say that first up on its list is probably getting back to its TAS market profile high, 66.17. But I'd really say a test of that swing from 9/24, September 24th. That's the 65.27. You're trading at what looks like about 67.34 as we speak right now. That might be a buy into the healthcare sector. And I'd say you'd also go take a look at some of the equities inside the XLV and see what they're doing. I have not done that. Let's look at the XLK. It's basically flat today, off 4 pennies, so it's holding up pretty well. It also took out its swing point from September the 19th. That September 19th, was the 18th? My apologies. There was 7.4 million shares. When Price took that on, it was 9 million shares, so 9.5 million shares. So it's got an A to B equals CD to the upside as well. That's confirmed. You'd go back, in this case here, inside the XLV, you go back to that February. You go back to that February low out there to figure out your A to B equals CD to the upside. Now, inside the XLK, the technology sector, she has formed a new market profile. That was today. 40.34 ought to be a level that holds as support. It won't bother me if it gets inside that September 19th, September 18th swing point. I won't say, hey, it's back inside the lower part of its range and that move to the upside is now overdone. It's just not the way that that this market is going to play out there. We've got the financial sector as well. She's down 7 pennies, not a big deal. Dow's off 35, S&P off 2, composite down 11 points. TFNN.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 54, 52 points. S&P down 4.5. Composite off 13. Russell down 4 points out there. You got the energy sector. That's green. Let's go take a look at the energy sector. Of course, we know this has been just smashed and bashed and all those things out here. But let's go see what it is doing right now. It's getting above a market profile high out here. This is the second time that it's tried piercing that level. Remember, I mentioned silver being one of the weaker of the the two metals out there. Much like if you think about the October 15th, 16th level, we saw again the Russell 2000, which was the weakest link out there. Really was the weakest link that started to show strength out there. You kind of like to see the weak link showing strength out here. And if you take a look at the market profiles, great tool that John has put together for us to utilize out here, and you come all the way back out to these highs. For the most part, the resistance line, the red horizontal lines coming across my screen out here, have held as resistance. And so now you've got basically 2 to 3 of the last 5 sessions where the XLE has poked its head above that area. It's trying to really change its trend out here. 86.77 is the key number. Now, in the case of the XLE, I would say I would probably use the November 3rd swing point is going to be key. 26 million shares out there. If it can get above that high, 88.41 out there, that's sort of be a believer. I'd go take a look at ExxonMobil, Schlumberger, Chevron, of course, to see what's going on out there. Today, you're already at 3 million shares. 25 minutes of trading, so it's got some pretty decent volume in it, and that's after things being taken apart back. Let's just go take a look at ExxonMobil. It probably looks a lot like the XLE chart out here. Yeah, look, I mean, yeah. Wouldn't you say? You would have to say, hey, Steve, go ahead and put up the ExxonMobil chart, because it emulates, really when you're trading the XLE, you're trading ExxonMobil, right? So what we can say about ExxonMobil is it broke the trend line, little trend line that took you back into off the high in July of 2014, July 29th. You can use your next touch point, maybe the high September 17th out there. So that trend line was broken. Price actually came back and tested it on October 27th, and it stayed above that. Now, in the case of ExxonMobil, we can see that it really has changed its trend out here. Just look at the TAS market profile highs, the horizontal red areas. Those have acted as resistance consistently all the way down. You now are above that, so you've got a change in trend going on inside of ExxonMobil. That should bode well for the energy sector, the XLE out here. We'll see how the XLE handles this. About another 2 weeks worth of jogging sideways, consolidating sideways. It will be super frustrating. It should be super frustrating for most out there. Now, gold is up $11. Silver's up 24 pennies right now. Quick peek. Now, we did mention that gold was should go test its intra-session high, just simply because of the 10-minute spike out here. You know what I haven't done? Well, yeah, let's take a look at the miners out here. Let me switch over to the mining page real quickly while we have a minute. Let's see. So like yesterday, these miners look like they are up off the bottom out here. They're not waiting for the euro to find its floor, to find its bottom. We took a look at that yesterday with gold. With the euro getting kind of smashed yesterday, gold was moving lower. Silver, when we took a look at the miners out here, we showed they were all green. And that's really the same thing we've got today with the exception of Taseko Mines, TGB. That's off a penny out here. So looks like the miners have, they're putting in what I call a buyable bottom out here. And that's a good thing, because during the next couple-week time period where you might get frustrated, this might be an area where you want to go ahead and pay attention to. Folks, it's Fantastic Friday. You know what that means? Next up, the Bull Bear Nadex Hour with our man Tom O'Brien and Gerald Martin. Have a great Friday, a great weekend. I will look forward to seeing you bright and early Monday morning. Take care. Have a great weekend. Hey, reframe and elevate. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.